Hello everyone, and welcome to the DashCast, where we go about trying to find the most interesting people in the world of cryptocurrencies, finance, and business. On this episode of the podcast, I had the fortunate opportunity to sit down with well-known Mike Maloney, the founder of goldandsilver.com. Not only is Mike a proponent of gold, silver, and cryptocurrencies, but he's also spent an immense amount of time understanding the true history of money and also sharing his word through the well-known video series The Hidden Secrets of Money, one of my personal favorites to understanding monetary policy and the history of money itself. But to say Mike and I have a lot to talk about in this podcast would be a clear understatement, so stay tuned, you won't want to miss it. Our sponsor for this podcast is Pwc. Blockchain is here and it can fundamentally change how you do business. Distributed ledger technology and digital tokens are rewiring commerce, but can you rely on it? A lack of trust and regulatory uncertainty means few businesses have fully committed. PwC's latest report takes a look at where companies are in their journey and provides 4 strategies to navigate the new world of blockchain. Learn more by visiting pwc.com/blockchain survey to make sure your business isn't left behind. What is going on, everyone? My name is Nicholas Merton here from DataDash, and welcome to this episode of the DashCast. Today, I'm very humbled to have someone who I've kept up with well over for 7 years now. Been a big fan of his channel personally. This individual is known as Mike Maloney. He is the founder of goldandsilver.com, and he's also the founder of a well-known online series covering the history of money as well as the current state of central banking and finance, The Hidden Secrets of Money. He's got a great grasp from the content I've gotten to watch on stocks and equities, commodities, the housing market, the whole shebang when it comes to finance. And again, I've been a big fan of him. He's been someone who's kind of led me to where I am today. So Mike, thank you so much for taking some time to sit down and chat.
Thanks for having me. I appreciate it.
So I want to kind of dive in right away, and this is something I always like to do when I have people onto the podcast, is learn a little bit about, the individual's background. And I think you've got an interesting story because unlike a lot of people who kind of got in regards to finance through a financial background, you actually kind of experienced it through an entrepreneurial path as well. And I think that's always a better way to learn about finance because you see economics real time. So I'd love to hear about what you went through and kind of give people a little bit of background on who you are.
I have been an entrepreneur for most of my life. I've only held jobs with other companies. I think there were 2 times when I worked for other people, but it totals about 3 years of my life. The rest of the time, I would just come up with something and I would start doing it, and then other people they'd go, "Wow, that's cool. Can I help?" and I would have a company after a little while. That was my background. I'm dyslexic, and I actually am a 9th grade graduate. I did not go to college. I've never been back to school. I'm pretty much self-taught, and I've had numerous businesses, and I've had trade show production. I used to be a electronics engineer. I created very high-end loudspeakers, amplifiers, and preamplifiers, stereo equipment back in the 80s and such. And in fact, some of it is in museums now. But with the market crash of 2000, when the NASDAQ crashed, I lost some wealth, but what affected me more was that my father had left my mother with a pretty good estate that should last her the rest of her life. And the financial planner that we had hired, we got worried when the broker that my father had used said, "These markets are just crazy. I don't understand them anymore." That scared us. Actually, we should have stuck with him because what he was saying was people are currently going crazy. The NASDAQ, for instance, the valuations were insane, and he was just saying, basically was saying he was worried and that we should go towards safety. But what we did, because we thought when he said that he didn't understand the markets, we started my sister and I started interviewing financial planners to help us out and help my mother out. And I got this financial planner, and over the following couple of years, he lost about half of the estate that my father had left her. I fired him. I moved everything to cash, and I started studying all of this stuff myself back in the year 2000. And by 2000, in 2001, I really started delving into trying to figure out the markets. And you can't really study the economy affects the markets, so you have to study that. And then when you study the economy, you can't study the U.S. in isolation. We're just all too connected. So you start studying global economics. And what you find is that the people that were really concerned about trade imbalances, budget deficits, all of that stuff, were the hard money advocates, the precious metals people. They were the ones that wrote about that stuff. They were also the ones that wrote about monetary history. And that's when I really fell in love. I just fell in love with economics and monetary history. I couldn't get enough of it. I started studying it just all the time, 5 nights a week, and then all day on the weekends, all day Saturday and Sunday. So anytime that I wasn't working, I was studying economics and monetary history. And then I met Robert Kiyosaki in 2003 I think, or 4. And went to some of his conferences. And in 2005, he at some of his conferences, he saw that he put me on stage a couple of times, and he saw that the information that I had in the group, they were very attracted to me. I'd step off stage and just I'd be inundated with people asking me questions and stuff. And so I asked him in 2005 if I could be the Rich Dad advisor for precious metals, because he was, let me see, I need to digress a little. I used to go to conferences like Cambridge House Precious Metals Investment Conference and the Silver Summit, and I saw people that I admired, like David Morgan and James Turk and so on, up on stage explaining monetary history and how things repeat to an audience of gold bugs. And I didn't want to stand up in front of an audience of gold bugs and tell them to buy gold and silver. I wanted a new audience. I wanted to save as many people as I could from what I saw as a pending crash in real estate. Mm-hmm. And so in 2005, I decided I wanted to make an alliance with the king guru of real estate, and that was Robert Kiyosaki, #1 real estate guru at the time during the real estate bubble. And he likes people that disagree with him. He wants smart people that don't have the same opinions. And I asked him if I could be the Rich Dad advisor for precious metals. He had put me on stage. He put me on stage in front of 300 people in Phoenix, and then again a year later in Phoenix, 300 people. And then when I met him to ask him this, I'd sent a letter in 2005 to his assistant, and I got back asking to be able to take him and his wife Kim out to dinner. What I had to propose would only take an hour or so, and I got an email back that says, "You've got 3 minutes backstage at the Los Angeles Convention Center." Robert's there to speak, and I went there. Now, I need to digress again. For a month before that, I had been doing meditations, laying down and visualizing, speaking to a group of 5,000 people at the Los Angeles Convention Center, and I was doing this every single day. This was like a goal. I had just incorporated goldsilver.com. I wanted to speak to people about the economy, monetary history, and to show them right now precious metals were in their cycle, and that there will be one day when they're out of their cycle. But before this cycle's done, there's going to be some immense gains, and it's all caused because of the fiat monetary system. And so I went to this event. They had comped me a couple of front row center seats, and a friend and I went, and then during the intermission, somebody came and got me and took me backstage, and the 3 minutes turned into a 20-minute conversation with Robert, and then I could hear the announcer announcing his name and the audience was coming back in from the break. And he goes, I've got to go out now and continue speaking, but I want you to come out and speak to the audience and tell them about Nixon taking us off of gold in 1971 and the resulting inflation and so on. And so I did. I came out and spoke, and then I was done, looked at him, and he just sort of nodded his head, and I tried to step off the stage to take my seat in the audience, and about 500 people came rushing at me with business cards, and the people from Rich Dad grabbed me and took me backstage and made me stay there until everybody left the event. The next day, I went to do my meditation, this visualization, and I went, oh my God, it just happened. I thought this was going to be 5 years out in the future. And in 30 days, it happened. I was also reading a book called A Traveler's Gift. I highly recommend it. The 7 Decisions for Success. I was reading that while I was building my company, and I did the visualization, and it was exactly the black curtains, the size of the audience, the size of the stage, the two 20-foot big screen monitors on either side of the stage. The only difference in the whole visual thing was that in real life, Robert Kiyosaki was standing next to me. In my visualization, I was alone, but that didn't matter. I got to speak to 5,000. And he had said backstage, well, you write a book and we'll see. You come to Scottsdale on your dime and we'll talk about it. And anyway, I wrote the book Guide to Investing in Gold and Silver, which became the best-selling book on the topic. And I had incorporated goldsilver.com in 2005. But, Robert wrote a book a long time ago called Teach to Learn. If you want to really learn something, try to teach it, because you got to try and make sure you're right on all of these things. You really got to study this stuff if you want to teach it. And the book took me. I was doing research from 2001 until 2007, so it was 6.5 years of research, and 2.5 years of writing and editing. So it was the most work I've ever done in my life on anything. But when it came out, it was, I had predicted that there was going to be a market crash. I said that we were in a real estate bubble. There's going to be a real estate and a stock market crash. And it happened the month after the book came out. So
Perfect timing.
Skyrocketed. And so that's sort of my history. And so I incorporated it. And the profits that we get from goldsilver.com when we sell precious metals, a good portion of it goes into producing these episodes of Hidden Secrets of Money and the rest of the educational material that we do. So we're different than other dealers. Goldsilver.com is committed to education more so than marketing. All of my competitors spend more on ads than they do on the education aspect. But, if I could do the education without having to fund it somehow, that's what I would do. That's my love.
I want to actually kind of pivot to that, because first off, that's amazing how something just overnight, you go to a conference like that and you're able to take a 3-minute conversation to kind of kickstarting, I think, a career down a whole new path. But in regards to the Hidden Secrets of Money, there's a lot of people I meet who they come to me and they watch the channel and they think, Nick, I want to kind of get into understanding the basics of finance, getting some kind of grasp on understanding why it's important not to have inflation, how central banking has played a role throughout history. And I always point them towards the Hidden Secrets of Money, because it's the first actual multi-part series that is digestible for the average person. In today's world, I think we can all agree. I know you were mentioning it's hard. We were talking beforehand on the podcast. It's hard to sit down and really stick to something. And and I can tell you for myself, if I didn't have that economic series that you created on the Secrets of Money, it would have been very difficult for me to figure out and truly understand the creation, again, of currency, how it actually works behind the scenes with banks in both the United States and across the world. And again, it's those kind of cornerstone pieces of video-based media that have helped an entire generation actually start to relearn the principles of money. Not to mention dive down areas that I would say for years we'd completely been unknowing of, in regards to, for example, I think you just put out the 9th episode talking about the Roman Empire and the correlation to the United States and how we're
9 and 10.
Yep, through 9 and 10. Yeah, it was the same repetitive mistakes of debasing the currency. So, I mean, again, I recommend to anyone who hasn't seen it, if you guys after the podcast are interested, definitely go check out The Hidden Circuits of Money. One of the best series. And again, very smart strategy instead of advertising, spending that money on, actually educating people, because I can tell you it's definitely pivoted me towards the interest in precious metals, and I know it's grabbed millions of people's attention, which, again, I think you've done a really good justice for the whole kind of alternative finance camp out there who's looking for a way to hedge against the traditional system.
Yeah, our marketing strategy basically is to pay it forward, give away something that is high value, and then hope that people will appreciate it and come back and maybe buy something from us later. So instead of just, I hate being advertised to. Just can't stand it.
Yeah,
so,
that's the thing. I for most of the time I used YouTube and stuff. I'm guilty as charged. I'd used ad blocks and stuff like that. But towards something that I really want to get your opinion on, Mike. I've been watching your content, and I think a lot of people for the past few years, and I think you could probably agree with this, in the gold and silver camp, and just generally, I think in the alternative finance camp, we've been expecting something to come, right? We've been expecting kind of the next 2008 or next recession of some sort. It doesn't have to be exactly like 2008. And we've been talking, I think you even coined the term the everything bubble. And I think it's a perfect definition of what we're going through right now. We obviously have had a stock market, an asset bubble that has propped up stocks through stock buybacks, through quantitative easing, through obviously the lowering of interest rates to practically zero on a global scale. And along with that, we've got, because of the lowering of interest rates and also quantitative easing, we've seen the real estate market make a rebound. Prices, even inflation adjusted, are getting close to their 2006 highs. So now that these things are starting to come into fruition, we're getting back to these ridiculous levels, and in equity markets, we've blown to new highs. Now that we've started to see the reversal of interest rates going higher, and we've also seen quantitative easing going to quantitative tightening, I'm interested to see what your kind of opinion is in regards to this year in 2018 comparative to, say, the past few years. Because I will tell you, I've flipped the switch in 2018. For years, I was bullish on equities. I knew the fundamentals were flawed, but I knew those flawed fundamentals were propping up markets, especially assets out of anything. So I'm interested to see, now that we've switched that tone, I think, in a sense, on the fundamentals, what your kind of beliefs are on the current status of markets.
Well, they never revisited undervaluation. During the market crash of '08, the stock markets came down to the high end of the transition point of fair value to overvalued. Mm-hmm. So the highest end of fair value or the lowest end of overvalued is where PE ratios and dividend yields and things like that came to. So I did not, I probably should have gotten bullish on the markets since 2008. But the thing is, all it takes when markets are overvalued, and they've been overvalued pretty much for this entire century. If you I like to take a look at things through the lens of history. And so when I make a chart of things, I like to look at it going back 50 or 100 years, or even more if I can. And everything has been out of whack for this entire century. By the way, you were talking about the everything bubble. I like to call it the everything except gold and silver bubble. But it's also the Bernanke bubble, and we're in for the Bernanke bust. In the year just leading up to 2000, Alan Greenspan was afraid of the Y2K bug, actually. He thought that would shut down a bunch of computers. And so they created a bunch of liquidity in the final 3 months or so of 1999. And you see the NASDAQ just go vertical at the same time that Greenspan is manipulating, and he didn't know that that's what that's where the currency, the liquidity was going. And then the NASDAQ crashed, and he lowered interest rates way too low and held them there way too long to get the markets levitated again, to try and get the stock markets back up. And he accidentally created this giant real estate bubble that fell apart and devastated the world economy. And when it did, Ben Bernanke overreacted, and we are going to suffer. We're in the Bernanke bubble now. And people love bubbles, but this is going to come to an end. And when it does, it's going to hurt, because this was the greatest manipulation of the free market in history, except for things like the USSR and Mao's China, of course. But they didn't have a free market. They tried to manipulate everything. One of the things that I've noticed is that whenever there's a manipulation, it stores up energy somewhere, and eventually the free market overwhelms that manipulation, and they lose control of it. And that's what's going to happen sometime within the next 2 years. And so I've been getting ready for it, and I'm grateful for the breather. I'm grateful that the markets aren't crashing yet, although they've been sort of scary lately, a little choppy, and a lot of ups and downs. There's a lot more volatility than there was.
Oh yeah, no, volatility's definitely picked up in equities. You got FANG stocks generally. I think the other day just reached 25% down for the month. It's been I think pretty much the bloodiest month for equities since since October of 2008. It's definitely it's time to, I think, kind of get on edge. I think people are realizing interest rates are rising. There's talks again of Europe has obviously gotten off of quantitative easing, and it's a question of whether or not Mario Draghi starts pushing up rates. But the one thing I want to bring up to you, Mike, and I find this fascinating. I know you look at a lot of data from your videos, and it's, again, you're mentioning PE ratios, all these fair value. I think it's very important to study these fundamentals and understand when enough are out of whack, it's usually time to get concerned. There is one really interesting chart, and I had tweeted this out a little while ago, where it takes a comparison between commodities to the S&P 500. I think it's the S&P Commodities Index versus the S&P 500. And what they actually found is that with this simple ratio, we usually see commodities and their peaks at an 8 times valuation over that of equities. And then it usually comes down to a bottom of around 1-to-1. And right now we're sitting at about a 1-to-1 ratio, and it's the cheapest we've seen commodities to equities in 50 years, since the 70s. And you were mentioning that cycle that you were talking about earlier, about again these major cycles in commodities, kind of they call them super cycles or macro cycles. I'd love to hear what you think about that. I think more than anything, as much as I'm interested in seeing hopefully crypto become a hedge and store of value in the long term, I think gold and silver are quite well positioned at studying those trends. I'm the same way. I like to swing trade, so I think it's very fascinating to see that we're that cheap compared to equities.
Yeah, it is. The commodities, though, in general, they've been in a bear market, though, for 2,000 years. Man gets better at building stuff and digging stuff up and punching holes in the ground, and oil comes slipping out. We just get better and better at it. But precious metals are not only commodities. So I'm bullish on all commodities, because I do think that we've hit a bottom. And I look at interest rates, and if you look at like the 30-year Treasury, there's a cycle to it, and the cycle is coming close to an end here, and interest rates can't go down forever. There will come a time, interest rates are determined by people's level of confidence and trust. They'll loan somebody currency at very low interest rates if they're absolutely confident that they're going to get it back, that things are going to go just fine. But if they're nervous about the economy, and they're nervous about the borrower, in this case the United States Treasury, then they demand higher rates for that risk. And so risk aversion is back. in the markets. You can see it in the volatility index and such. So I'm bullish on commodities, but I am expecting a short-term deflation before, the world's central banks have shown their cards. They have two tools, and they're both hammers, and so everything has to look like a nail to them. One tool is interest rates, and the other tool is creation of currency. That's the only two things that central banks can do to manipulate the economy. And we've already got interest rates that are too low, and this is part of what has caused the bubble, and they're raising them way too late. If they, I don't like the interest rates should be set by the free market anyway. They shouldn't be. It should be set by investors and traders, not by the Federal Open Market Committee meeting once a month and manipulating the economy by manipulating the interest rate and the quantity of currency. But take a look at base currency for the United States or for the ECB or whatever, or the balance. People don't understand when somebody talks about the Federal Reserve's balance sheet or the European Central Bank's balance sheet. The balance sheet is the stuff. They counterfeit currency. They create a dollar that didn't exist, and then they buy something, and that's how it gets into circulation. Yep. So they counterfeit and they buy something, and now the dollar is in circulation. Yeah. But we promise to pay it back with interest because what they usually buy is a U.S. Treasury bond, so they're buying an IOU, and the government now has the currency, but we promised to pay that. When we created the currency, bought that IOU, we promised to pay that dollar back plus $2 plus $1 of interest over a 30-year period. And the dollar to pay the interest does not exist yet, so you have to keep on going deeper and deeper in debt. The whole system is like totally insane when
you really understand it.
Yeah.
And
by the way, for your listeners, one of the things, the reasons that Hidden Secrets of Money was successful, and I Robert Kiyosaki had been a public speaker for like 30 years, and so he had a course on public speaking, and I took that course, and one of the things is to always define things, and we were talking about PE ratios earlier, and so for your listeners, it's simply the price per share of a stock divided by the earnings that company made per share of stock. And so how much are they making and what are they charging for this stock? And fair value is where you're paying somewhere between like 10 and 14 times earnings. In other words, if you buy the stock and nothing else changes, the company is making enough to pay for the stock that you bought in 10 to 14 years. And right now we've got these PE ratios that are like 50 and stuff. So it's 50 years before you recoup the investment, and then dividend yields where they actually do pay you something are almost non-existent these days. It's less than 2% dividend yields on the S&P 500. And so those are the measurements of a stock's value. I just wanted to clarify about that because we said PE ratios with, and one thing I learned in public speaking was if I talk over somebody's head, and then I've sort of lost them for the rest of the presentation. So anyway, I rambled, and I can't remember what the question was.
Oh, no, I think, honestly, we were talking about generally commodities, but I think you bring up a good point there, Mike.
Gold and silver are separate from all other commodities, though, because they're also money. Mm-hmm. And so they can take off in a different direction with the rest of commodities. If we have a short-term deflation, commodities will probably go down during the deflation. But, I think this is a very good buy point for commodities right here. They've been so beat up over the past several years, and the stock market has been everybody's darling, and it is so incredibly overvalued, as well as real estate and bonds. It also, there's always a recession around the corner sometime. And right now we're in the second longest economic expansion in U.S. history, and the Congressional Budget Office is projecting that we won't have another recession until the year 2029. That's their projection. That's the next recession. And I believe it's February of next year, this economic expansion will become the longest in history. It might be March or April, I can't remember, but we're very close to becoming, there's been somewhere between 47 and 53 recessions and economic expansions since the U.S. was established. And I've got a chart that lists all of the ones since 1843, I think it was. So it goes back to before the Civil War. I mean, there's 3 or 4 recessions on this chart that were before Lincoln was assassinated. So you got some serious data here, and you look at it and you just know that there's another one coming sometime soon. And then this is the longest bull market in stocks in history. And this is always there's a bear market that follows a bull market, always. Mm-hmm. And so we know that it's going to happen, but this time everything is so interlinked, where a problem in China, and they are just way they've got government mandated bubbles that have been going on for a long, long time. And when their bubble pops, when the market overwhelms the government manipulation, it's going to be bad, and that will ripple around the world. The same thing, Australia. They really, in 2008, they did not see a recession.
Yep, they didn't see a decline in housing prices or anything.
Right.
I saw it when I visited Sydney, and I just could not believe how many people became real estate developers overnight.
Right. Well, their real estate prices are starting to fall there recently, over the past several months, and it looks like their bubble might be over. But things are so interconnected now that it doesn't have to happen here. And so that's one of the reasons I've just been using all of this time to accumulate as much gold, silver, and cryptos as I can. I also have some emergency food and a bunch of water and so on. I'm in San Juan, Puerto Rico, where they have I moved to Puerto Rico because it's the only thing an American can do to legally mitigate your tax liability. Mm-hmm. I'm down here under Act 20 and 22. And 22, there is no capital gain tax there's no tax on any investment. So real estate income, capital gains on cryptos, for instance, there's no tax for the next 20 years. I have a 22 tax grant. Wow. So I know that something is coming. I just, I feel it in my bones, and I don't know whether it's going to be, if it's going to start right now, because the markets have been going. There could be a crash coming up on us anytime. I just feel like it's going to be next year, though. I'm not that afraid that it's all going to fall apart right now. But to me, it's these low gold and silver prices and super high stock and bond prices and real estate prices mean that it's time to transfer from those asset classes to precious metals. And it's really hard for me it's hard to put a value on cryptos. That's all determined by current supply and demand, because we just don't have enough history to see what's Bitcoin's fair value. But here's one thing I do know is the market that has come into cryptos so far is minuscule compared to the market that's going to be coming. It's just making mainstream right now. It's just starting. So there should be some floodgates that just open here soon. And all the people that have been, that have been down on things like Bitcoin and Ethereum, and I'm personally invested in Bitcoin and Ethereum and EOS and some Bitcoin Cash and Litecoin and Dash and Ripple and several others. So I've got a swath of cryptos, and I think that they will probably do well in a crisis. I am not sure. But
Yeah, I gotta tell you, I'm a little bit. I would say I'm an oddball in that the case where I kind of agree with that statement, where there's a potential where crypto could become a hedge eventually,
yeah,
especially the cryptos that are focusing on playing kind of a store of value and peer-to-peer payment system. For example, Bitcoin, Litecoin, and there's a few other ones like Nano and Monero as well that are privacy focused. But no, I liked your point. I liked your point, Mike, where you were discussing kind of generally kind of feeling a recession around the corner, and that it wasn't just simply the one thing that I think a lot of people have to get past is it's not always going to be just like 2008, and it's also not going to just simply start in the United States. 2008 really originated from the United States and the housing credit bubble, and obviously there was problems everywhere in Europe and Asia, but the one thing
might originate here, though. We just don't know. But the world is so interlinked, even more so than 2008, that any one economy, and you see the problems that Europe is having right now, and the Italian bonds, and there's problems in China. Someday, something will happen that's going to be big, and it will just sweep around the world. Plus, one of the things that I discovered when I was writing my book is that the world has seen many different monetary systems. We had the classical gold standard before World War I, the gold exchange standard between the wars. Mm-hmm. We had the Bretton Woods system from 1944 to 1971, and when that fell apart, we sort of the default that we went on to was they had tried to. There was something called the Washington Accord, and they tried to create a monetary system, but it fell apart right away, and we just ended up on the global dollar standard because the previous two monetary systems had flooded the world's central banks with dollars. The whole world is flooded with dollars, and so we're on the global dollar standard, but people do not realize how quickly this thing is decaying, and that it's natural when you've got the classical gold standard was a system that caused discipline on governments and government spending, and politicians really don't like it, but it was stable. And each system that we have had since then has become more and more unstable. And when the other systems were baby steps off of gold, full gold backing, partial gold backing of 40%, no specified gold backing under the Bretton Woods agreement, and it eventually fell to like 8% of the paper dollars. We printed so many. There was so much increase in base currency and base currency is a measurement of the paper dollars either in circulation or on deposit. It can be vault cash. It can be on deposit in the bank accounts that all of the commercial banks keep at the Federal Reserve or in circulation, and those are the dollars that they use for fractional reserve lending. The rest of the monetary system is pyramided. It's an upside down pyramid basically on top of base currency. But
all the digital money that's out there as well is generally created through that fractional system you discussed in the
exactly. Yeah, a bank just, you take out a loan, you sign a credit card, and a bank just creates $1 to do it. They just type it into the computers.
That's the part that I think so many people have a hard time getting that from what I've explained. They're like, wait, so you're telling me a bank can create its own money on top of money that it doesn't know? It's like, yeah, it's pretty fascinating, the whole system and the ratios.
Their books have to have 10% of base currency on hand, but basically when you take out a loan, if they've got a certain amount of currency on their books, they just make up all of the currency for the loan. It just goes into, they type it into your account, and it's brand new dollars that didn't exist until you signed that loan document. So whenever you buy a house, whenever you sign a credit card receipt, take out an auto loan, you are creating currency. The bank needs your signature for them to be able to create the currency and loan it to you, and then they have the gall to charge you interest.
Right. Yeah.
But the monetary system, when I was writing my book, nobody had written yet about all of these different monetary systems and how they change. You could research one system or another, and then I put all these market crashes and monetary system changes in a spreadsheet looking for cycles. And I went, oh my God, every 30 to 40 years, there's been a brand new monetary system. And they're drastically different from one to the other. But in the past, the shifts from one system to another only affected large international corporations, all of the banks. Those were the people that were worried about it and where there was a big effect on their business. The common man didn't even know it happened. This one, though, is going from nothing, fiat currencies, which have always failed throughout history. Thousands upon thousands of times this experiment has been tried. Nixon started the global experiment, where all currencies, this is the reason it hasn't fallen apart earlier, is because there is no currency that's backed by anything on the planet right now. They're all fiat currencies. Otherwise, people would have gravitated toward that one in any one of, it could have been the 1987 stock market crash that caused us to go back to gold or precious metals or something like that. But it wasn't, because there was no other currency. During the Weimar hyperinflation in 1923, people could protect their purchasing power by buying French francs or British pounds or U.S. dollars. They could just, but now they're all tied together. They're all fiat currencies. No fiat currency before the Bretton Woods system had ever survived, and we've been trying it for since it was. France was the first attempt in the Western world, but hundreds and hundreds of years before that, China was doing fiat currencies forever. I mean, I think their fiat currencies go back. I'm one of the few people that has been through 5 national monetary museums, New York, the Bank of England, the Bank of Japan. But when we were in Beijing, I toured the Chinese National Money Museum. And anyway, I'm wandering again. We were on the crash is going to be coupled with a shift in world monetary system, and the world central banks are starting to get ready for it. You can see. And when we went off of gold in 1971 and went on to just a fiat currency that's backed by an IOU that is paid by the United States government levying taxes on everybody in the future. So what backs the currency today is a promise to tax you until the day you die. That's what backs the dollar. If you have dollars in your pocket, it means that if you work, you're going to have to pay taxes in the future to pay off the interest that's owed, to pay back the principal plus the interest on these dollars. And this new system, the global dollar standard, was stable from August of 71 until Saddam Hussein started selling oil for euros. And that was the first big nail in the coffin of the global dollar standard. But now I can't keep up with it. There's a dozen nails in the coffin every week. It's just amazing. It used to be that if a car dealer in Mexico sold a Mercedes, he'd do a wire transfer to Mercedes for a replacement car. But the bank converts the currency to the pesos into U.S. dollars, wires them to the bank in Europe, and the bank in Europe converts them into euros, the U.S. dollars into euros, and then credits the Mercedes account, and a new car gets shipped to Mexico. That's all falling apart right now. China and Russia have developed their own international payment systems. The world has no idea what is going to happen when we have both a big global economic crisis, market crashes, bond crash, real estate crash. Crash in 2000 was a stock market crash. Then we had a stock market and a real estate crash. This one's going to be a stock market, a real estate crash, a bond crash, and a shift in world monetary system, all at the same time.
Yeah, I believe
It's huge.
you're going to experience, above all as well, a set of currency crises, as you mentioned. As you were talking about in the history of money, again, a period of inflation, deflation, and then hyperinflation. If I got that correct.
Yeah.
Yeah.
Because modern currency, it's not money, it's currency.
Yeah.
Only gold and silver are money, actually, and it might be that some of the cryptocurrencies prove themselves to be the first new money in 6,000 years. I mean, they have to maintain their purchasing power over long periods of time, and only gold and silver have done that. All other currencies are national fiat currencies. That's the reason we have the foreign currency exchange. It's not the foreign money exchange, and you don't have a national money. You have a national currency, they call it. And yeah.
Yeah, to that point actually about crypto, I actually think that's a very good neutral view on it, because I'm not someone who's overwhelmingly biased saying that crypto is money just yet. We've only had about a 9 to 10 year history, depending on the day that Bitcoin was created. But really, on a tradable market, we've only had cryptos really around for about 7 years now, since 2011. And the thing that is really interesting about crypto is it has a lot of the fundamentals that are similar to gold. That's why people see Bitcoin as digital gold and everything like that, with the limited supply and the mining process. But the thing that's very interesting is that in building store of value, a lot of people, I've always had people say, how, gold's not store of value, it goes up and down over time. And the thing is that I always tell people that stores of value can be volatile. They have periods of volatility because they react to the flaws in traditional markets and traditional monetary policy.
Well, there's never been a time in history that one has had staying power. They usually have a life of about 30 years, I believe it is. And we've been we went off the Bretton Woods system in 1971. So we're 47 years into this. We're getting close to 50 years old. And this is the worst designed monetary system of all of them. It was the petrodollar also that kept the dollar's dominance out there. And that is another thing that's falling apart. China opened up an oil exchange. And on the Shanghai exchange, they started doing futures contracts. So, and pretty soon, they've already surpassed us in oil consumption. They're the largest oil importer in the world. And pretty soon, they're going to be demanding from the oil producers that they sell their products denominated in Chinese yuan, not U.S. dollars anymore. And this is big because on the Shanghai exchange, there's also gold futures, and so an oil producer can sell some futures contracts and get paid and produce the oil and deliver the oil and close out the futures contract. He gets paid when he delivers it, and he can take those futures contracts that are get closed out and instantly convert it to gold and take the gold off of the exchange. So they and I know that Saudi Arabia, they do like gold over there. Saudi Arabia, Dubai, and
that's very true.
So it's very interesting. It used to be that if you were doing business from one country to another, or you always had to use the dollar as an intermediary. But there's direct swap lines now between China and Russia, and probably 20 countries or 30 countries, and there's more every day. So this dollar dominance that we've had, that has been a privilege to enjoy, is being threatened. And then things like the trade wars that we have started. This is very dangerous stuff. This was it's probably a third of the cause of the Great Depression, the Smoot-Hawley tariffs, the Smoot-Hawley Act that created all the tariffs and slowed down world trade. And we're going down this same road again. And it also makes it, and it's interesting because, see, one of the things that Trump doesn't know, there's economics behind this. And I'm not a Democrat or a Republican, so I really don't care who's president at the time. I just care about the economics behind it. And this is bad economics. There is an equation that, let me see, it's, I can't remember the equation, but basically if you want to be able to run budget deficits and to have somebody loan you currency at low interest rates, you have to run a trade deficit to where you're buying more stuff from other countries than you're exporting, because you're sending dollars over to them that are in excess of what they need. And if they sell them on the Forex, it causes their currency to go up and the US dollar to go down. So instead of selling them on the Forex, those countries like China, they will create a bunch of their own, the central bank there creates yuan and buys the dollars from the commercial banks, and gives the commercial banks yuan to replace the dollars that when you buy an Apple iPhone, the manufacturer over in China gets, you pay in dollars, but they get credited yuan in their account. The dollars that the bank ends up with are sold to the People's Bank of China, who just creates more yuan. So they suffer terrible inflation over there instead, and they take the excess dollars that they end up with and they buy U.S. treasuries as currency reserves for the central bank. So they're buying those the dollars to buy the U.S. treasuries to loan us the currencies so that we can run budget deficits, so that we can have all these wars and everything. And they do that to keep their exports up, because their big priority is keeping people employed in China. That's the one thing that they want. They really don't care about the huge inflation that they've gone through over the past 20 years, because there's been some very serious inflation, and it's all caused because they have to print brand new yuan to be able to buy up these excess dollars that are coming in and neutralize or sterilize them so that they don't affect exchange rates and make Chinese products expensive in the United States and cause trade to go back into balance. Well, Trump wants to run the deficits, but he also does not want a trade deficit anymore. And that means that interest rates have to go a lot higher, because he's not going to have China for a customer for the treasury bonds. They're not going to be buying them if we're not shipping over all these excess dollars. And so the economics behind it doesn't work. And what you're going to see is everything in the United States will become a lot more expensive. A 25% tariff means that all of your consumer electronics are going to go up 25%. Ford. I own, since 2012, I've driven Teslas. And I just think that Tesla, I just a few days ago, a week ago, took delivery of my Model 3 dual motor performance. Jesus, this is the best car ever made. There's nothing like it.
It's the next car on my mind personally as well.
I don't know where you live, but if there's an app called Turo, Turo, and you can rent a car from private individuals. It's Airbnb for cars.
Oh, wow.
And I drove a Model 3 6 months ago in Florida, just a single motor one. And you need to go, your listeners need to go out and drive one of these things. It's just absolutely amazing. It accelerates so quick, it just glues you to your seat. I was just looking at a magazine when I was waiting in a doctor's office, and there's a review of a model of a BMW M3 and a AMG Mercedes and the latest Alfa Romeo, and all of them have between 500 and 600 horsepower, and these are the highest performance sedans in the world, and my car will just kick their ass. It's silent. It gets 118, the energy equivalent of 118 miles per gallon, plus it's the safest car ever tested by any government anywhere. And in Puerto Rico here, it goes for $45,000 less than a brand new BMW M3.
Wow.
And so there's just no comparison. I don't know how I got off on that. Technology is going to be one of the saviors of us. Why did we talk about cars?
Oh, we were talking about the trade deficit, but
deficit.
Yeah.
Well, it's hurting Tesla. They have one of their largest markets is China, and they have this huge infrastructure that they've put in with all these supercharger networks. Like with a Tesla, my Model S came with lifetime free supercharging. So I lived in California, but back in 2012, by the end of 2013, I think it was, I could leave Los Angeles if I wanted to without a dime in my pocket, no wallet. If I packed enough food, I could drive to New York, burning sunlight for free. Back then.
Wow.
It's, I think Ford said that it's going to cost them $5 billion or something, these trade wars. It's just bad for all of us. It's going to lead to disaster. There's nothing that episodes 9 and 10 of Hidden Secrets of Money were basically about government manipulation of the free markets don't work. It always backfires, and you can trace it throughout history. It's a bad idea. Just step back, create a fair level playing field of laws, let the free markets work. If somebody else wants to cheat the free markets, another country, let them, because it's like the first trade barriers that we put up, we started import duties on Canadian lumber. Now, Canada was subsidizing their lumber industry, and so we put this trade barrier up. You can't do it. You're putting Americans out of work in the American lumber industry because your lumber is cheaper. Well, they're taxing their own citizens to subsidize lumber that they sell us cheap. So all houses, anything made of wood in the United States is cheaper. And so we say, no, we don't want it cheap. We're going to make it expensive. And what ends up happening is every $50,000 job that you save costs the American consumers, I'm sorry, not taxpayers, consumers, about $500,000 to save a $50,000 job. And there's also things like, China imposes tariffs on some of the goods, like we sell a bunch of agricultural goods, corn especially, and soybeans and things to China. It hurt our farmers, so right away the president has to create an aid package for our farmers because he created tariffs on China. China created tariffs back. It hurt our farmers. So now taxpayers, we're not paying just more here. We're going to pay more in taxes. So it hurts the consumer. It hurts the taxpayer. It hurts everybody, all globally. It's just a bad idea. The government gets a little bit more currency out of it, but government doesn't produce anything that any sane person would want.
Yeah. It ends up.
Would you open up your wallet and buy anything that the government produces?
If they were a private business, they probably would have gone bankrupt a few decades ago. But
right, except they've got the Federal Reserve, which gets to counterfeit, and I don't. Yeah,
they're like a business that keeps getting bailed out. It's like okay, this time you're good. You're good this time. Next time, that's going to be the last time. But yeah, I mean, you described it very right, Mike. I think it's a game of ping pong, and what happens is you have these countries going back and forth, raising tariffs and competing in that case. But then eventually, again, it's a tax on consumers in that case. Yeah. It's very hard.
I'd like to back to your listeners and viewers and Hidden Secrets of Money. Episodes 8 and 9 have been some of the most well-received that we've had. It's purely educational. We're not really trying to sell you anything. These episodes are about government manipulation of the economy and how politicians don't learn from monetary history. So people have to be careful how they vote. When a politician, like I live in Puerto Rico, where the politicians for decades and decades and decades have been selling the public here pipe dreams that they're, vote for me, you're going to get a bunch of free stuff. And they borrowed themselves into a hole. The stuff that they're going to give away isn't free. Somebody has to pay for it. If it's stuff, if it's a good or a service, somebody has to pay for it. And they borrowed them into a hole that they're going to have a very tough time crawling out of. I just don't see, there's no easy solution here for Puerto Rico. Yeah. And the entire world is going down this same road. I often ask, if the entire world is in debt to whom do we owe it to? To whom did we borrow this? Who do we owe it back to?
Yeah.
And it's the banks get to counterfeit and buy up everything, and so it's owed back to this special class of citizens that we create special laws for that sanction theft and fraud, and because they get to counterfeit, create a brand new unit of currency, and then they get to buy something with it. In Japan, they buy a lot of the stock market indexes to keep the Nikkei up. So Japan, the government, the Japanese central bank is the largest
ETF
owner of stocks in Japan.
Yeah.
They buy, right now the biggest. The U.S. used to just buy U.S. Treasury bonds, but they bought a bunch of mortgage-backed securities in the crisis. And I did a presentation about a year ago that was decoding Fed speak, I think it was, or decoding Ben Bernanke. And Ben Bernanke wrote an economic paper back in 2001, I believe it was, or 2003. It was called Deflation, Making Sure It Doesn't Happen Here. And all you had to do was read that paper, and you could see the minute that Bernanke was made Fed chairman, you could see what the future was by looking at that paper. That paper was one of the things I based all the predictions in my book on, and the predictions that I had, most of them have come true, and the ones that didn't come true have yet to come true. They will in the next crash. But he talked about expanding the menu of items that the Fed can purchase to include, things other than bonds. And they did that with mortgage-backed securities. They did not go and buy stocks directly to keep the stock market from crashing. But one of the things I also identified, and that was fairly recently, was I was looking at a chart of tax revenues, and I went, oh my God, this looks like a chart of the stock market. And I overlaid the Wilshire 5000 total market cap index on top of tax revenues. And before the year 2000, there was no correlation. When the stock market crashed in 1987, which was an enormous crash, it was a huge event, but it didn't make a dent in tax revenues. But then with the NASDAQ crash and the crash in 2008, tax revenues fell about 18% in the NASDAQ crash, the years following the NASDAQ crash, and it took 4.5 years to get back to where we were as far as tax revenues. And then in the crash of 2008, tax revenues fell 28%. So you're talking about close to a third. The next crash, I'm expecting tax revenues to fall by 50%, and we're already in trillion-dollar deficits.
Yep.
And if 1.5 trillion or 2 trillion of tax revenues goes away and they want to stimulate the economy, they're going to be voting for more spending programs, not less. They're going to try to get the economy going by having more people, the government fund more projects and so on. And so I would be looking with this next market crash for the years following that to have deficits that are 2 trillion plus, 3 trillion. It might be. It's crazy, and this is going to be happening with a shift of monetary systems and this huge crash. So, the rush toward cryptos and gold. I'm writing 2 books, and one of the books that we had talked about just before going on the show here, I don't want to talk about too much. It's like a top secret thing. It has nothing to do with precious metals or cryptos. It's basically just fundamental economics. The other book, however, is about gold, silver, and cryptocurrencies in the next market crash. This big crash that's coming up. You add all of these things together, and what you see is that anybody that's in stocks, bonds, or real estate right now, their wealth is going to be transferred to the people that are in precious metals and cryptos right now. Now, cryptos, there's such a variety to pick from now. I mean, it used to be there was Bitcoin. It was easy. now you really got to do your research. And most of the cryptos that exist today, probably more than 90% of them, won't exist in 10 years. The design of cryptos is just getting better and better and better. And I don't usually say cryptocurrencies, because you've got all these utility tokens, and it's distributed ledger technology is the thing that is going to touch everybody's lives and completely change the world and secure the internet. And some of them are going to do spectacularly well, and you're going to have hundreds of you're going to have gains that are where $1 becomes $100. But you're going to have some big. I see cryptos though as speculative because they're highly volatile, and you don't know which ones are going to be the huge winners. And I see precious metals more like savings. So your speculation, for me, my speculation is cryptos, and I've got a lot in cryptos. But gold and silver, they're just fundamentally undervalued to where they're below most of the mining costs. Mm-hmm. So the mines aren't making any money digging this stuff up. That means it's got a floor under it. It can't go too much lower. But the upside is measured by, I say that they've got a central bank guarantee. When you buy precious metals, you're buying something that has a central bank guarantee. The guarantee is that the central banks will never stop printing the currency that these two metals that are money are measured in. Mm-hmm. And so one day they're going to explode, and you're going to see gold way over 5,000, possibly 10 to maybe 50,000. And if it goes over 50 or 100,000, that means that the death of the dollar is coming. That is very, very serious.
To that point, Mike, I think that's
silver at $14. Silver was $50 in 1980. Can you name something, anything in society that's selling at a discount to its 1980 price?
Not much.
There isn't anything.
Yeah.
Except maybe computer chips.
Exactly. To your point there, Mike, I just want to interlude there because I think, from what you talked about, you were mentioning some big numbers. You mentioned, for example, $2 trillion deficits. And you also mentioned, again, gold at 5,000 or 10,000 in that case. I think to an average person, it might sound crazy as it's a very bold claim. But the thing about it is it's not that wild because if we do see, again, a debasement of the dollar, if we do see some form of hyperinflation, I mean, we've already seen this. I mean, a perfect textbook example is Venezuela, but we're seeing this in the broader trend of emerging markets. And I think it's ignorant to think that it can't happen to the dollar, that we aren't going to lose that standard across the world. Because, like you said, we're starting to see the nails in the coffin. And when people lose trust in that, not predominantly just users, but businesses, when businesses don't have a stable means of transaction of value, that's when things get very scary. And then it goes on to the consumers, and it's a cyclical cycle. It just gets bigger and bigger and bigger. And that's where, again, numbers like that, numbers like Bitcoin being at 100K or 500,000 or whatever, it's not too far fetched. It's just a matter of, again, those steps coming into play.
I spoke at Bitcoin on the Beltway in 2014 in Washington, D.C., on stage with Trace Mayer. Mm-hmm. And there hadn't been all of these other cryptocurrencies developed yet. The Ethereum had just been introduced just shortly before. And, I was doing a calculation of money supply statistics divided by the 21 million that Bitcoin will eventually have, and the potential then was that Bitcoin at $1 million was not an absurd thing. Mm-hmm. And back then I think Bitcoin was 600 then, and it fell to 250, and I kept on buying all the way down. Just a weekly accumulation. But there can be some high prices for the cryptos, but you have to remember that the people say that, Bitcoin's capped. It can never, it did fork. There's Bitcoin and there's Bitcoin Cash and there's other things. So actually the inflation that has gone on with cryptos has been enormous as far as that sector. The number of Bitcoin isn't the only place that cash can flow anymore. But I do think that because crypto, the technology behind it is going to touch everyone's life on the planet. It's going to run the internet. It will secure the internet. People don't realize when they're talking about cryptocurrencies that the distributed ledger technology behind it is something that can run the power distribution grid around the world. It can run all of the dams and the water that comes out of your tap, and it can run the traffic grids. It can run all of the billing for the power too. So you get a bill directly from the blockchain, not from for your power. So it can make every email secure to where it would be very difficult for all of these spammers and scammers and all the thieves that are out there on the internet. It'll make it a much safer virtual world for all of us. So cryptos have an enormous future. It's just that which ones, and and how do we figure it out? And so that's your specialty, not mine.
Yeah, I'll let you know a summarized view. I mean, I think for me, again, I still believe you're absolutely right. There's a variety of commercial applications, and actually, I know you know very well about, and you've been following for a while as well, which I'm very proud of. Hashgraph, for example, and I went to the Hedera Hashgraph live reveal in New York City. I was front row, got to interview Lehman Baird, great team. I mean, to your point, there's so many different applications. The one that I am interested in, I think what will be, I think the killer app that will make the world realize the power of this technology is going to be in a store of value and money, in places like Venezuela and emerging markets, and hopefully in the broader part of the world, alongside gold and silver. And I mean, like you said, we're just touching the surface. This technology is a little bit separate from the internet in the sense that the internet had about a 10-year cycle since the peak years for us to finally start building out the infrastructure and finding value. But cryptocurrencies, building a whole new new currency market, but also tapping into the varieties of industries that distributed ledger technology can touch. It's not just one industry, which is really what makes this more of a long-term trend. Yeah.
If there's any data that needs to be recorded, or if it needs to be served like a website, or if there's any accounting that needs to be done, or all of that can be done better. That's distributed ledger technology is just the best way to do this. It's pretty much over with for all of the other accounting methods, and even like with Hashgraph and fast things like EOS, even a video game, all of the moves in a video game can be recorded and they're served. You're actually playing on the blockchain, and so it's just an amazing technology. And it could be that whichever cryptocurrencies end up winning could end up becoming the future money. Period. I don't know which one it's going to be.
There is a lot to pick from. I'll let you know if I figure out which one's going to be which.
Yeah.
But I mean, Mike, this has been really awesome. I think we've covered a lot of ground in this, and again, I'm interested, like we talked about, in the upcoming hopeful commodity cycle, with commodities being cheap to equities generally being on edge. In summary here, outside of the hidden secrets of money, what's the one thing for a lot of people who are just getting into the grasp of finance to kind of understand the history of central banks? Definitely go check out the Hidden Secrets of Money, everyone. It's one of my favorite series. But
you can download a free copy of my book at goldsilver.com. And my book, even though it's called Guide to Investing in Gold and Silver, the first quarter of the book is a very entertaining history of money. And I mean, it goes pretty deep into it, and the creation of the central banks. And then the second portion is sort of the current state of the global economy, and some fundamental economics. And then there's potential outcomes, and it's only the last 20% of the book that's actually a guide to investing in gold and silver. But the thing is that the predictions that were made in there did come true, except for a few of them. And some of them, like the Federal Reserve going in and buying the stocks in the stock market to keep that up, that didn't come true yet, but that was in Ben Bernanke's paper, and it'll happen in the next crash. Like I said, the central banks have shown their hand. The only thing they can do is create currency, because they really can't. The interest rates are already very low, right? In Europe, they're lower in most of the rest of the world than they are here in the United States. So we have a little room, but Ben Bernanke needed 5% of headroom or whatever. He needed to be able to lower it by 5% to get the kick that he got. Well, we don't have 5% anymore. You can lower it you can take it down to 0. And what are we at now? 1 3/4 or 2? I don't remember.
Yeah, it's pretty much around 2%, and I think Powell is looking to raise it to about 3% by next year. So I mean,
good luck with that.
Yeah, right. No, I mean, to that point, you're right. I think in summary, the point here to take into mind as we step into 2019 and why there's a fundamental reason to be on edge is that we're seeing now that the asset bubble that's built up can't sustain itself. And it's very simple to understand why, because the cost to borrow capital is getting up there to where you can expect your returns to be in a market that's already been in a bull run for 10 years. So you can hope maybe that you'll have 3 or 5% gains. But this year, we had, I think, around 8 to 10%. I can't remember how much, or sorry, I'm doing my math wrong there, about 12%. And then literally within a month, we've just cleared it all away. What happens to someone when they've borrowed, when a set of financial companies have reached to levels of corporate debt like 2008 where they've borrowed tens of billions of dollars, and they just bought equities a few months ago, and then they see they're down on their money 12 to 14%. That's a very worrying sign, and it makes investor sentiment to borrow capital to buy equities completely separate from what it was just a year ago. So it'll be interesting.
Well, as he raises rates, though, it also slows down the real estate market, which is in a bubble that's popping right now, and so all of these things are so interconnected. And if you look at a chart of interest rates, every time the Fed raises rates, they keep on raising until there's a crisis. They are the ones that pop the bubble each time. The interest rates are the pin, the bubble pops, and then they take. So it's like there was a financial analyst, Jim Paplava from financialsense.com. And one of his interviews that I heard back in like 2002 or 3, he was comparing Alan Greenspan to a drunk driving off down the freeway, bouncing off of the guardrails. Create a bubble, pop a bubble. Create a bubble, pop a bubble. Just weaving down the freeway, and that's what very much what they're like. We're in the everything bubble, but this is the Bernanke bubble also. Bernanke created it. Powell is going to have to clean up the mess. There will be the Bernanke bubble and then the Bernanke bust. The NASDAQ bubble was the a Greenspan bubble, followed by a Greenspan bust, followed by the real estate bubble that was a Greenspan bubble. And so that was the bust that was caused from that was all of Greenspan's fault. They caused the crashes by causing the economy to go into a bubble. Mm-hmm. If they hadn't messed with it in the first place, there wouldn't be these crashes. And it's one step forward and 2 steps back as far as I'm concerned. There's some things coming up in the book that I won't tell you about that show that the transactions that don't happen because of these market crashes, it's a permanent scar that you can't go back and fix these. We would be much further ahead if we had slow, steady growth instead of these big spurts and then a crash and a big spurt and a crash. It also makes it very difficult to come up with business models. During a crash, there's a lot of businesses that go bankrupt. Mm-hmm. And so,
Yeah, slow compounding growth all the way, and that'll put us in a much better predictable market, but also, again, if we have the proper form of money to store value, a proper means to pay it, I mean, that's the best system you can have. It's something paper currency can't buy.
Yeah, it's stable prices lead to a stable society. And, the mission of Hidden Secrets of Money is to enlighten the world that maximum prosperity can only be achieved through individual freedom, free markets, and sound money. And that's a fact.
Yeah.
It's absolutely true.
Sadly, we've had to learn that through history that that's the case rather than just knowing it. But Mike, this has been awesome. I appreciate you taking the time to talk a little bit about all these things. I'll be sure, again, if you guys haven't already, can't reiterate it enough, definitely check out The Hidden Secrets of Money. Mike and his team.
And go to goldsilver.com and download a free copy of my book, goldsilver.com. Free copy.
Absolutely. Yeah. Definitely read into all the free resources they have, guys. Really nice stuff. It's definitely different than pretty much any other gold company I know out there. So, Mike, thank you again for taking the time to talk, and it was a pleasure. Hopefully we can have you back on in the future.
Thank you. It was great.
And that's going to be it for this episode of the DashCast. Thanks so much, everyone, for tuning into this episode. And if you liked it, please give a thumbs up down below, as well as an idea of who you'd like to see on the next episode of the podcast. I want to go ahead and give a real quick shout out back to Mike Maloney for coming on to the DashCast. It was not only great to finally talk to him after being a fan of his videos for over 7 years, but it was awesome to see that even now today, he still has the same fire and passion for teaching the world about true sound money than he ever has before. And for those of you who haven't seen it, please spend some time to check out The Hidden Secrets of Money. It's definitely worth your time. Our sponsor for this podcast is Pwc. Blockchain is here and it can fundamentally change how you do business. Distributed ledger technology and digital tokens are rewiring commerce, but can you rely on it? A lack of trust and regulatory uncertainty means few businesses have fully committed. PwC's latest report takes a look at where companies are in their journey and provides 4 strategies to navigate the new world of blockchain. Learn more by visiting pwc.com/blockchain survey to make sure your business isn't left behind.